Hey guys, Stock Saturday, and it's going to be a brief update because I've sort of gone the whole winter without getting a cold, and now I get a fairly bad cold. Portfolio's got a bit of a cold as well, down about 5.6%. It's about 23,000. No sort of huge surprises as to why, but yeah, it's a little bit worse than the market. S&P down 2.4%. Tech side on the Nasdaq a little bit worse, 2.6% just on Friday, and 3.8% for the week. So 5.6, a little bit worse, but yeah, not horrendous, and hopefully sort of outperform on the upside. This has largely sort of come on the crypto side and a little bit from Hymax Technologies, sort of lagging behind, and the option side gets hit pretty hard on that. Plus, sort of gold and silver doing really well. Gold sort of pushing all time, well, smashing through new all time highs. Silver doing quite well, but the miners sort of have not followed suit just yet, at least. I still think they will. Results come out, and inevitably they'll look pretty good, and I don't think they can be ignored. So yeah, not a huge amount of earnings this week. That was sort of, it might have been a short video anyway, but we did have KGHM. So they have a few slides in their presentation that I quite like. Copper production is looking pretty good, up 3% year on year. Sort of mainly focus on the Polska meats side, and not the others in the group. They sort of tend to report mainly on the Polska side, and that's ever so slightly down. Silver production was down. We sort of knew that was down to maintenance earlier in the year, but 1,341 tons, still really solid. 173,000 ounces of other precious metals, so gold, platinum, palladium, that sort of thing. I mean, it's not a small amount of production really. It's not to be overlooked. And then a tiny amount of molybdenum. And I always like this slide, sort of taking 2020 and their 2030 goal and sort of seeing where we are each year. They're saying domestic copper production, they want to get to 600,000 tonnes. They're at sort of 588,000 now, from 560 back in 2020. So that's good. International sort of was 150, now 141, sort of relatively stable. Silver, they do note that they're expecting the silver to drop over time to 1,200 tons in 2030, but yeah, 1,320 in 2020 and 1,340 this year. And then they have a lot of green and sort of, ESG targets. Copper recycling is pretty good, 159,000 tons recycled. I think as the price rises, people will be looking more for recycling. So that's a good string to their bow. And then accidents, and aiming for zero accidents. Of course, you're never going to say we're going to accept 5 accidents or something. But yeah, they had sort of 6.64. Yeah, on their metric. Sure what that is, whether it's accidents per 100,000 hours worked or something, but yeah, I kind of think that's inevitable. And then financial results all looking a little bit better. We had obviously a reasonable rise in copper in sort of earlier in 2024, and that sort of has proved good for the full year results, up 6% year on year revenue. Obviously, we've had a reasonable rise in copper in the last month, so yeah, the Q1 results should start to look up. Group adjusted EBITDA, 8.4 billion, up 58%, so that's pretty solid. And Q4 in particular was over double Q4 2023, so very nice. And then the all-important costs looking rather nice for the group, down 7% year on year, down to $2.67 per pound from 2.87. So with copper sort of was getting up to 4.50, close to $5 for a little bit in 2024. That's really good. Copper now sort of pushing into the 510s, 520s. That should be very, very nice. Noted sort of this is on the international side. They've had a significant improvement in the Robinson mine on their international side. For most of 2023, they were mining low copper content zones and they struggled with technical problems. So they're now pushed on from that, and yeah, down from $4.15 to $1.52, which is a hell of a drop. The main assets, core assets, if you like, up slightly from 298 to 307, but again, with copper sort of pushing into the fives, that's not too bad. Obviously, this isn't all-in sustaining cost as I would like for gold and silver miners and that sort of thing, but yeah, it's sort of a more of a cash cost. But so you have a little bit to add to this, but there's still a decent amount of profit there. And then their Sierra Gorda, sort of more international, was down 5% year on year as well. So very nice. All the international side is where a fair amount of the profit is coming from, and sort of the bulk of the volume comes from domestic production. And balance sheet side, looking sort of reasonably okay. Debt up from 978 million, this in dollars, or you can have it in Polish, up to $1.29 billion. But obviously with the increased profits, this has brought the debt to EBITDA ratio down to 0.8, which is not a lot of leverage really for a miner. So that's good. Obviously increases in debt largely down to sort of investing capex. Yeah, they do note here the revenue, obviously revenue sort of, you can see this huge green bar for the main domestic assets, but then over on adjusted EBITDA, it's less than half of the EBITDA because it's less profitable. And then you sort of have the international side as a small amount of that, about a ninth of that. And then that's sort of a quarter, a little less than a quarter of adjusted EBITDA, so that's pretty good. And then the other segments is sort of a very small amount, and that is quite a lot of adjusted EBITDA. So yeah, the international side is, at the moment, the more profitable, and the sort of domestic side is just sort of volume and a little bit of profit. But again, with a increase in copper price, that will start to get profitable as well, and sort of operating leverage really helps. So overall, very happy. Sort of very nice mix, I still think, of copper and silver. You don't really get that many other miners sort of that are this sort of production mix other than Southern Copper, and they are sort of much higher much higher valuation. So yeah, KGHM are the sort of budget Southern Copper, I always think. Higher cost, so higher sort of leverage to the copper price, basically. If copper drops, then they'll really struggle. And they do slightly more silver, as a proportion of their mix than Southern Copper. So I like that as well. So yeah, got rid of sort of Glencore, and Glencore seem to be doing fairly poor at the moment. Rio Tinto as well, and Vale, sort of more focused on the iron ore, and I was preferring copper. So I may even add to KGHM if more money becomes available. So a quick look at economic news. There was sort of a little bit of PMI data. I prefer the ISM PMI numbers, to be honest, so don't really. I'll have a quick look at those, but not too much. February CPI, obviously we're a little bit on from that now, but UK CPI a little bit lower than expected, sort of across the board. 0.4% core for February, 3.5% year on year, so that sort of helps things along a little. Durable goods in US slightly better than expected. And then Thursday not a lot. Friday we got some retail sales at the UK looking quite good actually. 2.2% month on month, and year on year, sorry, for February, 1% month on month. So yeah, last month's numbers were revised down from the looks of it, but still reasonably good. They were expecting much lower numbers for this month. But then the US side was a little bit unfortunate, and I think part of the reason for the drop on Friday, PCE numbers, this is the Fed's preferred inflation metric, was higher, not a huge amount higher, but last month's was revised up from 2.6 to 2.7 on core PCE year on year. That's the big one. They want that at 2%. So revising last month's up, they expected this month to be 2.7 and it was 2.8. So a little bit of a double whammy basically. On headline, it was sort of around about expected. So there's something in core that is doing a little bit of damage there. And the GDP now sort of fluctuating all over the place is back down to minus 2.8%. But still think this is largely down to imports. So on the portfolio side, obviously things have taken a reasonable knock. Even, as I say, even on the gold and silver miners, they're not exactly doing particularly well. Coeur mining sort of way off the highs, even considering, they do a lot of silver, and with their acquisition, they're doing more silver, but they still do a lot of gold, and, gold's at $3,115-ish, I think it was, sitting around yesterday, so yeah, surprising to not see these higher just yet, but I'm expecting more. And crypto miners obviously getting whacked at the moment, despite Bitcoin being up from the bottom sort of a few weeks ago, 76,000, and sort of on yesterday's drop, it's gone to about 83. So yeah, a little bit strange, but I suppose a lot of people are expecting the bull market to potentially be over, this year, maybe into early next year. So every month that goes by is 1 month less of bull market available. So they could really do with the price going up fairly sharpish. But Fresnel is my sort of constant, only one that is doing reasonably well. On the interactive broker side, not really moved in on KGHM and Pan American, to be fair. But the option side, obviously, with all those stocks going down, as you've seen in the ISA, the options get whacked. Down to double figures now, 87,000. Obviously, profit is taking a huge hit. This doesn't include my realised gains that I've sort of sold and then moved into these. I just don't put the total sort of since I started there. But yeah, Equinox has sort of stayed a little bit flat, was up midweek. Coeur mining sort of come down a little bit. Himax obviously back down to $7.50. The options have taken a reasonably big hit. Obviously I sold some quite a bit higher up than here, so pretty happy. I think I sort of sold about 2.5, 3 times my investment. So yeah, fairly happy with that, and I still think it's got room to run into the end of the year. And then yeah, all the crypto miners sort of taken a huge hit. Hive sort of down to 5,000 now. There is potential that this doesn't go anywhere, and I'll just lose that remaining 5,000. Be 100% loss. Got to accept that, but I still think they can do well going into the end of the year. Riot sort of similarly, waiting on an AI deal basically, and similar with Iron. So Iron obviously have a very large site that they are waiting for an AI deal, but Iron also have the sort of increasing production. I think they're going from 30 exahash, they're probably a little bit more than 30 now, but to 50 exahash by June. So that's quite a jump, and they are, as far as I've seen, the lowest cost producer out there. So even at today's prices, they shouldn't be doing horrendously badly. So I have added more, about 70 contracts this week, but obviously the loss, goes further and further deeper. But, potential for a sort of increase in Bitcoin price for these to just suddenly explode higher. but we'll have to see. Clean Spark, I haven't sort of added to Clean Spark. Just was more tempted by Iron really. So yeah, that's the portfolio. As I say, got a bit of a cold just like me, but I think we can look good potentially with global liquidity sort of on the up, and this just being a market sell-off around tariffs and sort of general unhappiness. As I say, gold up sort of $20 yesterday and sort of $50 earlier in the week, and the miners are down. It's just sort of hedge funds and basis trade unwinds and everything, just selling sort of everything they've got. So yeah, that's nothing to be too worried about. So leave your thoughts in the comments below and like and subscribe. See you soon.